Stocks dropped huge during the 3 trading days starting April 3rd and ending April 7th. The Dow, the S&P, and the Nasdaq were all down between 7 and 8% during those 3 days. Many of the news channels were also saying that this was the biggest drop since the start of the pandemic. So why was there such a big drop in the stock market? The market was reacting to President Trump announcing tariffs for goods coming from outside of the US from all over the world. The severity of the tariffs and how fast it happened shocked the market. My immediate thoughts going through these days were, I kind of like real estate. So I thought it might be the perfect time to compare some of the pros and the cons of both stocks and real estate. Now, before we go on, know that I'm not an expert in stocks. I'm not qualified to give stock advice, and I also can't predict stock markets or real estate markets. Things are just too unpredictable for anyone to know what will happen next. To summarize these pros and cons, I'm also going to create a diagram on the screen. Stocks and real estate on the x-axis and the pros and cons on the y-axis. After that, I'll talk about some of the uncertainty that this might cause to home values and investment properties and how some of the things might affect us, even though they're just guesses. Stock pros. Let's talk about the pros of stocks first. If you owned stocks in 2024, you probably had a pretty good stock year. There were gains of 30% or more. Some leaders like Nvidia increased by 170% and Palantir increased by over 350%. So this is the first pro of owning stocks. If you pick the right stock and you have the right timing, you can potentially have astronomical returns. There's nothing like that in real estate. But how likely is that? Warren Buffett, the infamous investor, has said that in the past, the vast majority of traders won't beat the S&P. The second pro of owning stocks is that it's low maintenance. During these rallies, I sometimes think to myself, why invest in real estate? During these times, stocks provide better returns, and you can avoid the dreaded 3 T's of being a landlord: the toilets, tenants, and trash. So it sounds ideal. With stocks, you can also invest slowly. You don't have to wait to build up a down payment to buy something. You can also buy a little bit over time, and you can build up with automatically reinvesting your dividends. So let's talk about stock cons. Even though 2024 was fantastic, 2025 and the last few days remind me that the stock market can change fast. So the first con for owning stocks is that as fast as things can go up, they can come down just as fast or faster due to world events or overall trends. So for example, Nvidia. From January 1 to April 2nd, Nvidia lost 20% of its market value, all while remaining the same dominant player in AI. And AI is booming. Some of our 75-year-old agents are using AI to generate drafts of property descriptions. The second con for stocks is that stocks react to news fast, maybe too fast. The 24-hour news cycle makes me feel like I should constantly check the latest news. Having to constantly check on the news is not my ideal passive investment, and it feels higher maintenance than fixing a plumbing issue once in a while. That's all I have for the stock market. If I missed anything, please let me know in the comments below. So let's move on to real estate. What are the pros to owning real estate? So when I talk about real estate, I'm referring to buying an actual property with a single or a small number of private individuals. I'm not talking about REITs or other ways to hold real estate. Also, I'm basing my experience off of Southern California real estate. So let's start with a person's primary residence. Your primary residence really isn't a true investment, but it is most people's biggest asset. Some people say it's a living expense, and I think that can also be true. In my almost 20 years of doing real estate and through hundreds of conversations I've had with people, real estate has really been the most attainable way to create long-term wealth. So I learn a lot from these clients, especially the seniors, and sometimes they're either downsizing or they might be moving into an assisted living facility, and they're selling their home. And these $2 million homes today were purchased decades ago for $100,000. Many of them tell me that without the house, they wouldn't be able to make their next move independently. They would need financial help from a relative, or they might have to live with their kids, something that they hope to avoid. In these cases, their homes were their biggest asset, and had they not bought decades ago, their life would have looked very different today. So my first pro for real estate is that it's one of the most accessible ways to create long-term wealth. You don't need to predict the next big technology boom. You don't need to understand PE ratios or worry about a company falling behind like a Boeing or an Intel. You just buy in a good area, preferably with good schools, and historically you've done pretty well. Pro number 2 of buying a primary residence is that you are shielded from rent increases and inflation. One of my favorite quotes is, "A penny saved is a penny earned" by Benjamin Franklin. Having a stable house payment with a magical 30-year mortgage saves a lot of pennies. With inflation and rent increases over time, at some point in your future, your rent will be more than your monthly payment if you lock in today. And at the end of your mortgage, your payment disappears. While if you rented, you would still continue paying. So let's talk about true investment properties. When I first started in real estate, I wanted to make sure to plan for my retirement. Being in real estate means there's no company 401k, there's no pension, it's all do it yourself. So for me, I wanted to have a stable monthly income to offset monthly expenses. I compared stocks and real estate. Stocks can provide passive income through dividends, but if the economy wasn't doing that well and companies stopped issuing dividends, I might lose my entire income. When compared with monthly rents coming in, I felt a lot more comfortable collecting rents. Plus, for an investment property, I can always drive by, I can perform an inspection, and I can do proactive maintenance on it, so I feel much better about that. So pro number 3 for real estate investments is the stable monthly income. Pro number 4 is that changes in real estate takes months and more often years. Unlike political news or world events that can make stock markets swing up or down in any given day, real estate is less volatile. Changes in real estate usually come in the forms of new regulations such as restriction on rent increases, security deposits, or new safety requirements. Owners and property managers usually have enough time to get ready for these changes. However, just know that sometimes natural disasters like earthquakes and the recent California wildfires can affect real estate also. In the end, if investors choose a strong market and good tenants, income and property values have been relatively stable and often increased over the long term. Number 5 in my last real estate pro is the tax benefits of owning real estate. For primary residences, there's the SALT deduction on your income tax. There's the Section 121 exemption, which allows a couple to sell their primary residence, take $500,000 in profits, and not pay a penny in taxes. For property taxes, there's California Proposition 13, which limits property tax increases to 2% per year, even though most of the time real estate goes up more than that. And then there's Proposition 19 that allows seniors to transfer their low property tax basis to a new property. Let's say they're moving from a 2-story to a 1-story for their safety. For investment properties, there's the 1031 tax deferred exchange. This allows you to sell a property that has increased in value without paying the taxes on the gains now. Instead, you would defer them by buying a larger property and then pay those taxes when you sell that larger property. Or you could also do another 1031 exchange. For investment properties, you can also depreciate the cost of the physical building, and that would reduce your income taxes. All of these tax benefits make owning homes and investment properties more attainable and sustainable. If you want me to do a deep dive into some of these tax benefits, leave a comment below. Now let's talk about the real estate cons. Tenants, toilets, and trash, the infamous 3 T's. Yes, managing a rental property can sometimes be stressful. You might get a call at 10 p.m. about a plumbing backup, or one tenant might not be getting along with the other, or maybe someone filled up the trash can and there's no room for other people's trash. Managing a property will include finding the tenant, collecting rents, coordinating repairs, emergency calls, and unfortunately, the rare eviction. When it comes to managing properties, you have 2 choices. You can either manage it yourself or you can hire a property management company. If you have a small number of units or you want to learn about managing properties before handing it to somebody else, I think managing your own property can be a fantastic learning experience. If you just want someone to do it for you, a good property management can provide a lot of peace of mind and handle all of these issues, including the middle of the night plumbing issue. Management companies work by collecting the rent, deducting any maintenance items, bills, their management fees, and return the remainder to the owner as their monthly income. Most companies will provide a monthly report detailing all maintenance items and a summary of the month's events. That way you can check it to see if there's any unexpected expenses. Our property management company also sets a repair amount that's not to be exceeded unless authorized by the owner. That way, if you do have to do a more expensive repair, such as replacing a main drain line, we obtain approval from the owner before we agree to the work. Hiring a good property manager will give you peace of mind knowing someone is coordinating all the work for you. We also have a network of vendors with preferred pricing. The preferred pricing alone might save you more than what we charge in an entire year. However, you will still have to make decisions on large projects like plumbing work, unit remodels, termite work, and roof repairs. It's not quite the set it and forget it type of investment that I would love to have, but I've never found something like that. It is nice to know that all you have to do is say yes, and all of these things will get taken care of by the property management company. Con number 2 for real estate is that it's not easily bought and sold. Stocks can be bought and sold in seconds and cost almost nothing to transact. Selling and buying can take 2 to 3 months starting from the decision to the close of the transaction. In addition, because the process is more involved with inspections and appraisals and mortgage approvals, buying and selling usually costs more. Usually somewhere between 6 and 7% when you combine both the seller's and the buyer's costs. Insurance risk is con number 3 for real estate. This is a hot topic right now. Because of the disasters like the Eden Fire, the Palisades fires, insurance companies are claiming that they are losing money and insuring properties in California and other states is no longer profitable. Because with California, there's so many regulations about how insurance premiums can be charged, many insurances are canceling homeowners and investment property policies, leaving owners to rely on smaller insurance companies or, worse yet, California Fair Plan. With so many residents in California, I do believe that California and insurance companies will find a way, but it may end up resulting in higher premiums for owners. The last con for real estate I have is risk from government regulations. Rent in our area keeps going up because more people need to rent than there are homes to rent. We have a housing shortage, and to solve this, California has enacted some laws such as trying to limit rents, trying to allow ADUs to be built and to be sold separately, and to allow more units to be built per parcel. Some cities have gone even further and limited rent increases to below inflation. These government regulations may affect returns on home ownership, and it's not under a single owner's control. So are tariffs going to affect the real estate market? Looking forward, I have more questions than answers and pretty much no predictions. Some things I will be watching are, 1, will building material prices go up? Will that affect new home prices? So for me, when I think of building materials, I immediately think of imported tiles and counters, but there are also a lot of American-made materials such as roofing, air conditioning, plumbing fixtures, sink and tub companies that are American-made and hopefully won't be affected. Number 2, does that mean that the homes and investment properties are going to cost more to repair? So our repair cost for investment property is going to go up. I know a lot of small business owners who import things from China to sell in America. If those small businesses have challenges, is it going to reduce the number of real estate home buyers? Number 4, Trump wants to have lower interest rates. If we do get lower interest rates, is it going to increase inventory when sellers become less rate locked? Will buyers have more purchasing power? Will the demand for investment properties increase because returns are going to improve? There are just a lot of questions right now. While there are different arguments for holding real estate and for holding stocks, I think it's important to remember to have a balanced portfolio, whatever that means to you. If you enjoyed this video, check out this one on how you can retire through real estate investing. Thanks for watching, and I'll see you on the next one.